Asset classes explained. To build a Monki portfolio, Monki needs to understand something called asset classes. Because not all assets are the same, not even close. Different assets behave in completely different ways at different times. Some go up when others go down. Some are slow and steady. Some are fast and chaotic. Understanding the classes is how Monki builds a smart collection instead of just randomly buying coconut things and hoping for the best. Stocks. Monki buys a tiny piece of ownership in a real company. Company grows, piece worth more. Company struggles, piece worth less. Historically, one of the best performing classes over time, but bumpy. Monki needs a strong stomach. Bonds. Monki lends shells to a government or corporation and they pay back with interest over a set period. Calmer and more predictable than stocks. Less exciting, more reliable. Like that friend who always shows up on time and never starts any drama. Real estate. Physical property, land, buildings, coconut huts. Grows steadily over time and generates rental income. Requires a lot of shells to get started, but historically, very powerful for monkeys who can get in. Commodities, raw physical materials, coconuts, oil, gas, gold, copper. Monki just owns the actual stuff. Volatile, but useful as a hedge against inflation. Gold in particular has been a store of value for all of recorded Monki history. Monki civilizations rise and fall. Gold just keeps being gold. Crypto, digital asset on a blockchain. No physical coconut, just math and trust and very strong opinions on the internet. Most volatile class on the list. Can double in a month, can lose half its value in a week. High risk, potentially very high reward. Maybe don't check the price every 5 minutes. Index funds and ETFs. Not a separate class so much as a way to invest in many classes at once. Bundles hundreds of assets into one single investment. Beloved by passive investors for instant diversification, low fees, and historically solid long-term returns without Monki having to do very much at all. Each of these classes has its own personality, its own rhythms, its own risks and rewards. The smartest monkeys don't just own one class, they own a mix. Because when one class is having a bad time, another class is often having a good time. A well-balanced monkey is a monkey who sleeps well at night regardless of what the market is doing. Risk versus reward. Before Monki starts throwing shells at everything in sight, Monki needs to understand one fundamental truth. Every single asset carries risk. Every single one. No exceptions. Not one. Zero. Anyone who tells Monki otherwise is trying to sell Monki something. Probably something bad. Do not buy it. But risk is not something to fear. Risk is something to understand. Because risk and reward are dance partners. They go everywhere together. Higher potential reward means higher risk. Lower risk means lower reward. This never changes. Bonds sit at the low risk end. Slow, steady, predictable. Monki probably will not get spectacularly rich, but Monki also will not lose everything. Stocks sit in the middle. Strong long-term returns, but crashes happen. Monki needs to hold through the rough weeks without panicking. Crypto sits at the far end. The roller coaster at the back of the theme park with no safety bar and an overly excited ride operator. Very high risk. Potentially very high reward. Risk also includes liquidity. How quickly can Monki turn an asset back into shells? Stocks, very quickly. Real estate, not at all quickly. Monki cannot sell half a coconut hut. Monki has to sell the whole thing, and that is a stressful, expensive, time-consuming experience. And there is concentration risk, putting too many shells into one single asset, even a great one, because if it fails, Monki has nothing. The goal is not to avoid risk entirely. It's to take on the right amount of risk for Monki's situation. A young monkey with decades ahead can afford to ride out crashes. An older monkey near retirement needs to protect what has already been built, know the risk, match it to Monki's life. That is how Monki navigates this. Diversification. Do not put all shells in one coconut tree. That is the whole concept. Real diversification is not just owning lots of different stocks. If all stocks you own crash together, Monki just owned different versions of the same risk. Real diversification means owning things that do not all move in the same direction at the same time. Stocks and bonds often move opposite to each other. When stocks crash, some investors move into bonds for safety. A monkey who owns both is somewhat cushioned. like two coconut trees leaning against each other in a storm. Adding real estate to the mix gives Monki exposure to physical property values and rental income that move somewhat independently of the stock market. Adding some commodities like gold gives Monki a hedge against inflation and economic uncertainty. Suddenly, Monki's collection of assets is genuinely spread across different types of risk and different economic conditions. Index funds make this beautifully easy. Instead of individually researching 50 stocks and 5 bond types, Monki puts shells into one fund and instantly owns a tiny piece of hundreds of companies. Diversification achieved. Monki sophisticated. Monki barely had to do anything. Diversification does not guarantee Monki will never lose shells. What it does is lower the chance of one single bad event wiping Monki out completely. The difference between losing 30% and recovering over time versus losing everything with nothing left to recover with. Spread the shells. Own different things. Let the collection work as a team rather than betting everything on one star player. Monki doesn't need to own everything. Monki just needs to own enough different things that Monki is never one bad Tuesday away from lying on the floor staring at the ceiling. Assets and inflation. There's something lurking in the background that Monki needs to know about. Something quiet and slow and sneaky that affects every single Monki shells whether they are paying attention or not. It is called inflation, and it is coming from Monki shells whether Monki likes it or not. Here's what inflation means. Over time, things get more expensive. Coconuts that cost 1 shell today might cost 2 shells in 20 years. The coconuts didn't get better. They're the same coconuts, but Monki needs more shells to buy them. So the shells Monki has today are slowly becoming worth less over time. Not worthless, worth less. There is a difference, but still, not great. Imagine Monki saves up 1,000 shells and just sits on them for 20 years. 20 years later, those 1,000 shells only buy what 500 shells used to buy. Monki's pile didn't shrink, but the world got more expensive around it. Monki actually got poorer by doing nothing. But here's the good news. Good assets grow, and the best assets grow faster than inflation does. If coconuts get 3% more expensive every year, but Monki's coconut tree grows 6% in value every year, Monki is not just keeping up with inflation. Monki is beating it, actually getting richer in real terms. Some assets are especially good at this. Gold has been valuable for thousands of years because there's only so much of it and it does not rot. Property rises alongside the cost of living. Commodities like oil tend to rise with inflation because they are the building blocks of everything else that gets more expensive. Monki has 2 choices: sit on shells and watch inflation quietly eat them, or buy assets that grow and fight back on Monki's behalf. One ends with fewer coconuts. The other ends with more coconuts than Monki ever dreamed of. Monki knows which one to pick. What makes a good asset? Monki has come a long way. From wanting one coconut at the start to understanding inflation, asset classes, risk, and diversification. Now comes the most important question of everything Monki has learned. How does Monki actually spot a good asset? A truly good asset does 3 things. It grows in value over time, it protects against inflation, and it generates income along the way. The very best assets do all 3 at once. Coconut rare, coconut valuable, coconut also paying monthly dividends. Beautiful. Track record matters. Has this asset proven itself over decades, not just during a good market? Through crashes and recessions and all the messy things in between? The stock market has crashed many times throughout history. It has recovered every single time. A coconut cryptocurrency invented 3 weeks ago by an anonymous Monki on the internet does not have that. Not automatically bad, but Monki should know what Monki does and does not know. Understandability matters. Never put shells into something Monki cannot explain simply. When something is exciting and everyone is talking about it and prices are going up, it's very easy to convince yourself you understand something you actually do not. If Monki cannot explain what the asset is, why it has value, and what would make it grow, Monki should not own it yet. Learn first, buy later. Genuine value matters. A good asset has value for a real reason. Real products, real demand, real underlying worth. Not hype, not speculation, not the promise of future value that never quite arrives. And fit matters most of all. A good asset for one Monki is not a good asset for every Monki. A young monkey with decades ahead has a completely different situation than an older monkey 5 years from retirement. The best asset is the one that matches Monkey's timeline, Monkey's goals, and Monkey's actual life. Not what a very confident monkey on the internet said would make everyone rich. The quality that ties it all together is patience. The most common reason good assets fail to deliver is not that the asset was bad, it's that the monkey panicked and sold too early. Good assets need time. A coconut tree does not produce 1 million coconuts overnight. It grows slowly, then suddenly, then abundantly. But only if Monkey resists digging it up every time the weather turns stormy. Monkey planted the trees, Monkey watered them, Monkey left them alone long enough to grow. And now, Monkey rich.